The company Trump Media, which, as the name suggests, is closely tied to the President of the United States, appears to have sold hundreds of millions of dollars worth of Bitcoin. Hackers hit a well-known crypto wallet and drained nearly $90 million. And ADA, Cardano's native cryptocurrency, jumped more than 10% over the past week. These are today's main topics. Stay with us as we break them down properly, and if you enjoy what we do, please hit the like button, leave a comment and subscribe to the channel with the notification bell. Trump Media, the company behind the social network Truth Social and directly associated with President Donald Trump, continues to offload large amounts of Bitcoin. At least that's what the platform Look On Chain claims, reporting that the firm withdrew another 2,628 BTC, which it allegedly sold through Crypto.com for around $165 million. This is the second such move in just a few months and continues a rather unpleasant trend for the company. The story began last year when Trump Media aggressively entered Bitcoin, purchasing more than 11,500 BTC for a total of $1.37 billion at an average price above $118,000 per coin, practically at the market peak. Since then, however, the company has been selling at significantly lower levels. With the latest transactions, the total amount sold has reached 7,281 BTC at an average sale price below $75,000. In other words, realized losses now exceed $555 million. The potential reasons vary: regulatory uncertainty, liquidity needs and internal financial pressure. For now, it's unclear whether Trump Media is simply reducing risk or trying to stabilize its balance sheet after poor timing on its purchases. But one thing is certain: such massive sales always create tension and can put short-term pressure on Bitcoin's price. Meanwhile, the crypto market turned red again, and this news may be one contributing factor. Bitcoin dropped below $63,000, Ethereum fell under 1,850, and total market capitalization slid to $2.22 trillion. It's also important to mention Trump Media's own statement. According to the company, this was not a sale, but a routine asset transfer. They insist they did not liquidate Bitcoin and simply moved funds to another partner for operational purposes. Naturally, this raises questions because on-chain data shows movement toward a centralized exchange, something typically associated with selling. Trump Media, however, maintains that the BTC remains part of their holdings and that the market reacted prematurely. Another unpleasant event in the crypto space which likely contributed to the latest market decline involves one of the popular Bitcoin hardware wallets, COLDCARD. It turns out that certain versions of the device contained a critical vulnerability that allowed hackers to drain a total of $88 million in BTC from affected users. The issue stemmed from a flaw in the random number generator, the component responsible for creating the seed phrase. In rare cases, it generated predictable combinations, opening the door for attackers to reconstruct private keys and gain direct access to funds. COLDCARD is a wallet many Bitcoin maximalists rely on precisely because of its reputation for maximum security. That's why the news hit so hard. Vulnerabilities of this kind are extremely rare and generally considered almost impossible. In this case, the attacks were well planned and targeted, with hackers waiting for the right moment to drain funds from compromised addresses. CoinKite has already released an update that fixes the issues, but the recommendation is clear: if the device was used with the affected firmware version, the seed phrase must be replaced immediately and funds moved to a new wallet. The COLDCARD panic quickly spilled over into market sentiment. Data from Sentiment shows Bitcoin has reached its lowest ratio of positive to negative commentary on X, Reddit and Telegram since such metrics have been tracked. The reason is direct: the COLDCARD exploit hit self-custody, the place people believed was their final and safest line of defense. When a hardware wallet with such a strong reputation gets compromised and nearly $90 million disappears, fear spreads instantly. There's another interesting angle. According to Bloomberg analyst Eric Balchunas, the COLDCARD incident is actually bullish for Bitcoin ETFs. His reasoning is simple: when a wallet considered elite and ultra-secure turns out to have a critical vulnerability, people start questioning who exactly is behind these devices. COLDCARD is made by a company with only a handful of employees, something many investors see as a red flag when it comes to storing life savings. And this is where ETFs shine. They offer Bitcoin exposure backed by massive regulated professional institutions that don't make amateur mistakes. Fees are minimal and custodians operate operate under strict oversight. Paradoxically, a blow to self-custody solutions like COLDCARD may accelerate the shift of mainstream investors toward ETFs. As mentioned earlier, the crypto market turned red again, with most major digital assets posting significant weekly losses. But ADA is a clear exception. Cardano's cryptocurrency jumped to 19 cents after recording a weekly gain of more than 10%. The most likely catalyst behind the move is whale activity. Large investors bought over 240 million tokens in just 5 days, bringing their total holdings to around 14.5 billion ADA, or 37% of the circulating supply. This aggressive accumulation is a strong bullish signal for ADA for several reasons. First, when large wallets buy at this scale, it almost always means they see value at current levels and are positioning for future upside. These investors don't buy for short-term trading, they accumulate because they expect a structural price shift. Second, controlling 37% of the circulating supply creates natural scarcity. When such a large portion of tokens is locked in long-term wallets, liquidity drops, making any future demand for more explosive for price action. Retail may sell, but when whales buy, the balance of power shifts. Third, periods where whales accumulate while retail hesitates often precede stronger moves ahead. Historically, when big players build positions during market weaknesses, it signals that smart money is preparing for the next cycle. That's where we wrap up, team. Have a great start to the week and see you tomorrow.